Distinguished guests, ladies and gentlemen, and a very good morning. I would like to express my gratitude to Thailand's Office of Insurance Commission and the organizers of the Thailand InsurTech Fair 2022 for inviting me to be a speaker at today's session, which focuses on strategies to support the transition to digital and sustainable insurance. Today, many aspects of our lives are done online and digitally. Consumers have higher expectations for round the clock services, seamless lifestyle interactions, and personalized one stop shop experiences. Digital ecosystems enable this. For example, partnerships in wider cross industry ecosystems give providers the agility and reach to thrive in an era where customer centric value proposition is key. By 2025, it is estimated that 75% of Asia Pacific business leaders will leverage on digital platforms and ecosystem capabilities to adapt their value chains to new markets. So, as consumer activity become increasingly entrenched in digital ecosystems, critical sources of information which were previously unconnected are becoming more connected. This has the potential to not only deepen protection, but also mitigate long held issues in insurance, such as moral hazard and adverse selection. While the pandemic presented numerous challenges, it underscored the value of financial security in times of stress. This has generated greater consumer and business appreciation for protection solutions. Studies have shown increasing reliance on digital channels to purchase or seek information on insurance and takaful cover. Currently, more than two-thirds of Malaysian consumers purchase insurance and takaful products through traditional offline channels. At the same time, a similar proportion also expressed interest in using online channels. In response, the Malaysian insurance and takaful industry has become increasingly digitalized, and some have developed dedicated and longer term digital strategies. So, against this backdrop of digital innovation, there is a growing sense of urgency to deal with environmental challenges. In recent years, climate change is causing greater volatility in weather patterns. Globally, overall economic losses arising from natural disasters have been on an increasing trend for the past 40 years. In 2021, such losses amounted to about 343 billion US dollars, with Asia being the most susceptible region to natural disasters. While storms and droughts have long been familiar to this region, they have become more intense, more prolonged, and more frequent. This translates into greater economic losses for governments, businesses, and households, which in turn can make its way into the financial system. Last year, in Malaysia, we experienced an episode of what is hailed as the country's worst flood since 1971, which resulted in economic losses of between 5.3 billion ringgit and 6.5 billion ringgit. In addition, there are gradual and structural changes that we cannot ignore. Over the last 20 years, the global population has more than doubled to reach almost 8 billion people. This has posed significant challenges for policymakers and governments to appropriately allocate capital and finite resources. Every country, including Malaysia, is experiencing aging population and will be affected by demographic changes either today or in future years. Declining share of working age population and higher number of old age dependents will strain the healthcare systems and place an upward pressure on costs of pension systems. The design of financial protection has to evolve, and for many underserved segments, financial protection has become even more pressing. The insurance and takaful industry should therefore embrace its transformative role, responding to these evolving needs rather than merely reacting to past and existing demand. With the advancements in digital technology, there is greater opportunity for the industry to be agile and adapt to these changes. So in my remarks today, I wish to outline three areas where further innovation is critical for the Malaysian insurance and takaful industry and share perspectives on how Bank Negara Malaysia will help to facilitate these fronts. One, to narrow the gap on insurance coverage and protection. Two, to redraw the frontiers for greater efficiency. And 3, to expand the horizons for the future of insurance beyond protection to prevention and to ensure sustainability. First, on narrowing the gap on insurance coverage and protection. In Malaysia, protection gaps remain among at-risk segments who may not have sufficient financial buffers in case of unexpected risk events. This may be attributed to, among others, traditional customer engagement practices that have limited touch points or interactions if no claims are made following the take-up of an insurance or takaful product. Changes in customers' preferences, lifestyles, and demographics in recent years have provided new opportunities for the insurance industry to increase the level of engagement with customers. The industry can also be more responsive in introducing products that can promote positive behaviors to enhance customers' risk profiles and resilience. There is ample scope to provide various forms of protection suited to working adults in the flexible gig economy and new entrants to the job market. In addition, there is still a shortage of business interruption cover beyond traditional fire or property damage for SMEs. This is partly due to the way traditional insurance models are structured, which are usually less suitable or beyond the range of affordability for these groups. And this is where digital innovations can play a critical role. Digital ecosystems and the Internet of Things or IoT leverage on richer data and automation that can significantly help to deepen accessibility to insurance. And this opens the pathway to viability for more specialized, needs-based covers, particularly to serve at-risk segments. This vision is not just an aspiration, but a clear reality. We are already seeing, for example, an expansion of partnership models with non-traditional intermediaries, such as e-commerce and e-hailing platforms. These partnerships have enabled the offering of sachet insurance or bite-sized insurance covers to consumers at point of sale. I'm intrigued at how consumer wearables with glucose monitoring technology are being used as data points to overcome traditional pricing barriers for specialized medical cover to diabetic patients. There can be no mistake, right? Innovation is occurring across multiple dimensions, spanning beyond the product level towards the whole business operations, even birthing entirely new digital-only financial institutions. At our end, Bank Negara Malaysia is doing our part to ensure a progressive and dynamic market, one that is welcoming of these novel business models and new entrants. The Digital Insurance and Takaful Operator, or DITO framework discussion paper published earlier this year, emphasizes inclusion alongside competition and efficiency as value propositions that we look for in assessing prospective applicants. DITOs are expected to complement existing players to address critical protection gaps in Malaysia. These include increasing insurance and takaful penetration among the lower income groups, expanding protection such as long-term care to the aging population, as well as providing business protection for SMEs against business interruptions and new and emerging risks such as cyber threat. As we work towards issuing the exposure draft on the DITO licensing framework, I encourage applicants who can demonstrate strong capabilities in these areas and meaningfully close critical protection gaps in Malaysia to come forward to be part of the journey with us. Beyond new entrants, we also envision data sharing platforms to be a key enabler in making critical protection solutions affordable through better cost control management and price transparency. Highlighted in our financial sector blueprint, published in January 2022, the cost of private medical care in Malaysia is among the highest in Southeast Asia. As such, an important priority is the development of a centralized data exchange platform by the industry in collaboration with key stakeholders in the medical ecosystem. Such a platform will not only facilitate the collection standardization of medical claims data, but enable the industry to transmit and analyze data in a more systematic, efficient way over the longer term. This could also pave the way for publication of cost of common medical procedures and implementation of minimum cost sharing models. On a broader scale, We are also committed to develop the building blocks necessary for an open data ecosystem in the next 5 years. The first step we are currently taking together with the banking, insurance, takaful, and fintech players is to identify high impact use cases to pilot by year end. Secondly, on redrawing the frontiers for greater efficiency, we envision the protection journey moving forward to go beyond just quote to claim. It must anticipate and fulfill multiple needs of consumers in a more efficient way. While we see efforts by existing players to transform manual claims processes with technology, there is room for improvement. The process of buying and claiming insurance remains cumbersome for many. Digital and IoT ecosystems can be game changers, but these applications must be designed with a consumer specific focus. As a start, there is a need to reinvent the claims journey by addressing prevailing pain points arising from manual processes and lengthy investigation timelines, especially for motor-related claims. As explained in our financial sector blueprint, Bank Negara Malaysia will continue to pave the way for insurers and takaful operators to digitalize the claims process. We support the industry's collective efforts to digitalize the claims process. We will also support the industry's efforts to improve existing infrastructures for a more integrated, transparent, and seamless journey as a precondition for full liberalization of motor tariffs later. This includes rolling out end-to-end digital roadside assistance solution that will serve as a catalyst for further modernization of the motor claims journey. Beyond reinvention, we should also explore opportunities to connect digital ecosystems with novel product designs to increase claims efficiency. An inspiring example is how we can automate the payout journey with wider applications of parametric insurance. Parametric contracts give greater certainty and allow money to reach policyholders faster through near automatic payment. According to a UK study by the Department of International Development, payments from a parametric insurance policy can be about 3.5 times more effective in disaster response than delayed payments from aid. For victims, this speed can have a decisive impact on their livelihoods. While parametric insurance plays a predominant role for natural disaster risk, I believe there is potential to apply this concept to more traditional protection needs in Malaysia and the region. Predetermined trigger events do not only have to be weather-related risk. Travel, power outage, cyber threat, and business interruption risk caused by supply chains can also benefit from predetermined payouts. There are thus ample opportunities for the industry to test or pilot such innovative offerings. At our end, Bank Negara Malaysia is committed to provide an enabling environment for the industry to explore, to test, and to introduce innovations. For areas that may require regulatory flexibility, we plan to enhance our regulatory sandbox with pathways to accelerate time to live testing by simplifying the gatekeeping process for institutions with strong risk management capabilities. We expect to announce more details on this later in the year and hope to see greater participation by the industry as well as the fintech and insurtech industry to offer innovative protection solutions through the enhanced regulatory sandbox. Third, on expanding the horizons for the future of insurance by augmenting protection with prevention and also to ensure sustainability over time. Insurers and takaful operators have always played the role to augment the future of insurance to include risk prevention. For years, the industry has provided consumers with loss prevention advice for commercial lines. Ways and demands on risk prevention, however, are evolving, and we expect to see a collective shift in the role of the industry from loss reimbursement to loss control and prevention in the upcoming years. The future of augmenting protection with prevention can be distilled through three pillars. First, by creating awareness of current risk levels among their policyholders. Second, by suggesting a change in behavior. And third, by offering incentives for changes in behaviors. The first two pillars are closely linked and is typically in the form of real-life risk mitigation as well as early warning systems. For instance, prevention triggers such as a missed safety task notification and water leakage alerts to activate emergency repair services can help prevent accidents. Telematics can also connect insurers and farmers to data from weather systems for potential safety warnings. However, raising awareness of risky behavior and how to address them are not enough. It is also fundamental to encourage people to instigate real and sustainable changes in behaviors. Insurers and takaful operators can leverage consumers' perception of the value of rewards by nudging them to adopt safer and healthier behaviors. Elements of gamification and behavioral economics can also be integrated. For example, a driving score leaderboard can motivate drivers to collect higher scores by adopting safer driving behaviors. We recognize that many of these successful models require tie-ups and expertise beyond traditional insurance business lines. To cater to these new digital realities, Bank Negara Malaysia has been adapting our outsourcing and risk management in technology policies. This has encouraged various forms of digital partnerships to be explored, with the focus on understanding the nature of risk, having in place effective controls, and also being facilitative of the innovation. For the industry, it is important for traditional players to continuously explore partnerships with various institutions such as startups, corporates, and behavioral research centers to create innovative products that incentivize prevention, healthier living, and greater quality of life. At the same time, traditional intermediaries will also have to consider how the evolving nature of partnerships would affect their business practices and pivot accordingly to remain competitive. In terms of the management of climate risk, we aim to maximize transition benefits and minimize downside risk. Hence, an inclusive strategy is key to avoid macroeconomic and social dislocations as we transition to a low carbon economy. Bank Negara Malaysia and Securities Commission Malaysia have established the Joint Committee on Climate Change, or what we call JC3, to pursue collective climate actions with the financial industry. The committee brings regulators and the financial industry, including many insurance players and takaful operators, together to promote alignment and drive climate actions in 5 areas: risk management, governance and disclosures, green finance and innovation, data, and capacity building. There is also continuous collaboration at the national and regional levels to promote coordinated and regionally coherent responses to the climate challenge. Within Bank Negara Malaysia, we take an iterative approach to allow the industry and us to converge on supervisory expectations and build a common framework for assessing physical and transition risk. Through supervisory engagements, we are able to understand how financial institutions are approaching climate risk, and at the same time, we can encourage and influence the board and senior management of financial institutions to give greater consideration to climate risk. To conclude, the window of opportunity for insurance to deliver meaningful propositions for all its stakeholders is wide open now. Therefore, it is imperative for the insurance, takaful, insurtech, and fintech industries to step up with strong stewardship towards leading today's innovation moving forward. I believe the discussions at this conference can help us better navigate the path towards this purposeful transformation of the insurance industry, not only in Malaysia and Thailand, but also across the region. If you are interested to find out more about Malaysia's financial sector blueprint, please feel free to download a copy via the shared link after this. With that, I wish you all a successful and productive conference ahead. Thank you.